Everyone has been talking about the million-dollar question. Which investment is more profitable between crypto and stocks? And no doubt you're here to get the answer to that question. So today we're going to lay these two side by side and provide the advantages and disadvantages of investing in them. We will look at the volatility, the risk of fraud, and the short and long-term advantages of investing in stocks and crypto. But what exactly are stocks and crypto? First, let's take a look at stocks. A stock is a share of a company that investors usually own. This means they earn a fixed dividend from the company now and then. A dividend is a share of the profits. So it's like legal ownership of the parts of the business and consistent rewards for that ownership. The stock price of a company is based on the ability of the company to generate profits. In other words, for a stock to be a successful investment, the company must perform very well over time. No one wants to invest in companies that are going bust. On the other hand, crypto is a digitalized unit of currency that is usually organized through a blockchain. Therefore, cryptocurrency is not supported by any hard assets. And this is the case for some of the most well-known cryptocurrencies in the world, like Bitcoin and Ethereum. Delving into cryptocurrency means you'd be able to perform specific functions like transferring money to other people through smart contracts. Smart contracts are like regular contract agreements, except their terms are executed as code running on a blockchain. These smart contracts are triggered as soon as certain conditions are met. A problem with crypto is that their prices are determined based on speculations and sentiments. So, as information about crypto changes, the price changes too. And sometimes it can be drastic and sudden. If hearing that scares you, you probably don't know too much about crypto. But that's perfectly fine and leads us to our next point. A savvy investor must be very knowledgeable about what they are investing in. It's vital to lay side by side the risks and rewards. If the investor doesn't seek this information, then what they're doing is no better than gambling. So here is the classic line. Do your research. Now, crypto is seen to be more favorable because of its mass and volatility, but let's look at the volatility of stocks. Someone who invests in penny stocks has a higher probability of encountering a lot of volatility than someone who merely owns a low-cost index fund. An example is the S&P 500, which gives you shares in the top 500 companies. Investing in the top 500 companies means that one company's downfall would not have a major impact because other companies would make up for it. So you almost can't lose. Doesn't that sound perfect? Plus, all of this is done with one simple investment. Another simple investment you can make, which is free, is subscribing to this channel to continue to educate yourself on investing and crypto. And don't forget to turn on the notifications too. The stock market covers a wide range of the individual risk tolerance of millions of investors around the world. Hence, its low volatility compared to crypto. And talking about crypto, it was created during the famous 2008 financial crisis. So there isn't really a whole lot of history about crypto that can be studied. This is dangerous because the price of cryptocurrencies are extremely difficult to predict. I dare you to try. But also don't. The crypto space also has a major problem with pump and dumping in the crypto market. Let's explain this. The term pump and dumping is a major activity with crypto scammers. They make a new coin and advertise it extensively to gather popularity, and with this comes a lot of investment. As a result, the price skyrockets, and when it's at its peak, they sell everything. At this point, people realize they've been scammed, leaving them questioning everything, and by this time, the scammers have already swiftly left the crypto space. So people end up losing a lot of money and most likely crying about it. This happens because anyone can come up with their own coin in the crypto market. However, this is quite impossible when it comes to stocks. Another reason why crypto scams are quite rampant is the market cap. This is more or less the maximum amount of coins that can ever be circulated. The market cap for new cryptocurrencies is often quite small, so a lot of advertising goes into it to alter the coin's value in the short term. As I said earlier, crypto is far more volatile compared to stocks, and it's not a disadvantage to you as an investor if you can judge right and cautiously pick your investments. It's an incredible opportunity to make money for yourself, and who doesn't want to make money, right? It's possible to make more money in the crypto market within a week than in the stock market in 1 month. It's just all about choosing the right investments. What's critical to be aware of is your time horizon as an investor. By time horizon, we mean the time frame or length of time that an investor would invest in a stock. A shorter timeline translates to having safer assets, so it'll always be available whenever you need it as an investor. The more volatile an asset is, the less suited it will be for people investing on shorter timelines. In summary, investors believe that risky assets like stocks would need up to 3 years to wear out any volatility. So, which one is easier to invest in nowadays? Is it stocks or crypto? Unfortunately, the stock market has a reputation of being dominated by rich people, so it gets increasingly difficult even to get involved in the stock market. Before the average individual can get involved in the stock market, they have to find a stockbroker that can oversee their trades. Fortunately, as time has progressed, things have gotten better. Nowadays, it's possible to invest in the stock market with an app on your phone. After all, there's an app for everything now, isn't there? Apps are extremely helpful because you can use them to learn how to trade more efficiently and even buy shares and fractions. So if you want to get a share of a company worth $100, you can get a fraction of it, maybe $10 instead of the whole thing. It's groundbreaking, really, and great news for those of us who don't have piles of cash lying around. Like stocks, getting access to crypto was also quite tricky. It was almost impossible to buy because the websites people use to acquire these coins now didn't used to exist, and the ones that were available didn't have the trust of the general public. Some of them included Mt. Gox. This website went on to facilitate 70% of the transaction of Bitcoin across the globe. Unfortunately, they went bankrupt because the website was open to hackers and lawsuits. Coinbase, on the other hand, has taken up the responsibility of trading crypto and has also decided to go public. This means that it's officially in the stock market. It has changed the cryptocurrency world because the industry has now been legitimized. With the help of Coinbase, crypto has become very easy to buy and transfer to private wallets. When investing, it's important to consider the long-term potential of the investment. Many investors believe it's more advisable to hold investments for the long term. This is because the US market is known to increase in value with time. For about 40 years, let's assume you make a long-term investment of around $10,000 in the S&P 500 index fund. You would now have about $708,143. If having that amount of money excites you, hit the like button on this video so it gets shown to more people just like you. A major characteristic of the stock market is that even though it may fall in the short term, it always turns out to be very profitable in the long term. Short-term investments can be as little as 1 day. Medium-term investments have about 3 to 5 years, while long-term investments are at least 10 years. It makes sense to look at investments like paying a bill. So just invest your money each month and forget about it. This way, you won't lose good investment days. Unfortunately, cryptocurrency's long-term potential is not very strong. The strength of either the crypto's short or long-term investment solely depends on how much it is accepted in the economic market. However, crypto has a very promising future and is now seen as a good way to store value, just like gold. The reason cryptocurrency would make a good store of value is because of the market cap. Only about 21 million coins would ever be in circulation at any point in time. So when more Bitcoin is sold, there's less than is available. So the demand increases along with the price. Crypto is apparently the future because it looks increasingly promising. Since everything seems to be going digital, it's not a bad idea if our money goes digital as well. Young investors have a preference for investing in cryptocurrencies compared to stocks. On the other hand, older investors are still conservative with their choice as they still prefer to invest in stocks. To each their own. It's all about what you're comfortable with and educated on. Both crypto and stocks have pros and cons, but it's not a bad idea to be diverse in your investments. So why not delve into other markets? Depending on your risk tolerance, this can bring about explosive returns both in the long term and short term. And who wouldn't like a huge increase in profits? To learn even more about crypto, watch the video on the screen next. And thank you so much for watching.